Hey, welcome everybody. Let me know in the chat if you can hear me and see the slides okay. Just want to make sure this works because we had technical issues last time around. So, and feel free to use the chat so we know that's working as well. Perfect. Okay, we have about 3 minutes to go before we start this off to let people in. So wait a little bit, but yeah, thanks again everybody for signing on with this. I really appreciate it. Yeah, this is going to be a lot of good. We have a lot to go through, so we about 45 minutes with me rambling on for a while, but then there'll be some Q&A at the end. So yeah, hopefully we answer a lot of questions for everybody. I see Robin, you're in here. Hey. Good. And yeah, for everybody that's joining, just again, thanks for popping into this. We got another 2 minutes to go, actually a minute to go here. There's still some more people coming in, so we might wait a little bit longer, but yeah, we should be getting rolling on here shortly. Perfect. Thank you. Yeah, so as we go along, just feel free, use the chat as much as you need. We're always here to answer questions. I'm going to be going through this fairly quick because there is a lot to cover. But if you have any questions, throw them in here. I'll either get to them on the spot or wait till the end for the Q&A, or the best option is just to simply book a call with us and we'll be able to answer some more questions there. If it's more personal of a question, we do ask just to book a call with us because if there's going to be a lot of questions, we'll end up running over our time. So yeah, feel free to use it, especially with the financing questions. Just throw them out there and we'll be able to answer them all, and we'll be good to go. So we're right at 7 o'clock here. There's still some people coming in, so I'll give it a little bit more and then we'll continue on. But yes, again, for everybody that just showed up, thanks for joining. We're gonna hopefully give you guys a lot of good information here before you guys start your home search. I'll give it another minute here and then we'll get rolling here. Then people can come in and out as they need to. Another thing is this is recorded. So if for some reason you have to jump out and miss some things, don't worry, it's recorded. We're able to, I'll have the recording up most likely by tomorrow, so that if you need the link, there will be an email coming out after this as well. That'll have the link for that as well if you missed anything. So no worries if you gotta leave it, it happens. So all right, we're about at 7:01 here. There's quite a few of us in here now, so we're gonna get started here. So again, everybody, thank you for coming. Thank you for joining. If you have any questions, feel free to utilize the chat as much as you can. I will try to see it. I'll try to see your questions if I can as I'm flowing through this. If I do miss it, there is a Q&A at the end, as I mentioned, so I can answer them then, or again, book a call with me. You'll see the booking a call link. I'm gonna put it in the chat right now. That's if you want to book a call with me one-on-one. Again, everything I do here is free. So if you want to ask questions or whatever it is you need, feel free to reach out to me. You just book a call with me and we'll be able to work things out. So again, so thank you again for showing up. This is a great webinar for first-time home buyers. I'll show you what things to watch out for when it comes to buying a home. And honestly, there's so much to cover that it's hard to do it all in one webinar. So I do both the basics. But when you want to know more, I can definitely walk you through some more of it. But as I mentioned, when you sign up for the webinar, you should have seen a message stating that you're going to get a book and a buyer's guide. So again, yes, that is what I'm going to do. Just for, again, my appreciation for you guys showing up. I do have a book out about buying a home. This is it here. This is my paper copy. I'm going to send you guys out all a digital copy, so it's good for e-readers. You can read it on any device you have. Plus, I'm going to give you my buyer's guide. That's kind of a short version of that, kind of just what I do and what we do for you guys when it comes to buying a home. So, so again, thank you everybody for showing up. This is going to be about 45 minutes worth of information, so bear with me here. So, as we all know, home buying it can be a pretty daunting task. It's for most people, it's one of the most expensive purchase they're going to make in their life. So we want to make sure it's smooth and you're comfortable and you're going to be in good hands while you do this. So let me know in the chat. I like to utilize this just to get some interaction. Let me know if any of these resonate with any of you guys when it comes to buying a house, because I honestly know when I bought my first house, definitely I didn't have this to fall back on. I was just going blind with a realtor that a buddy of mine referred me to, and it was kind of a disaster, but I can get into that a little later. So I want to make sure I alleviate all these for you. So if you guys are feeling any of this, don't worry, that's normal. My goal by the end of this webinar is to hopefully alleviate those. And if not, if we decide, when we go to work together, I'll even do better to make sure those you don't feel those at all. So just a couple things there. We're going to get into some introductions about who I am. Robin, who's going to be in the background, who is our great mortgage broker, who's going to be helping you out with that. So we're going to get into some introductions here, and then we'll get on with it. So here's a couple of reviews. Just a couple people that I've helped when I first started out here, just to help them get out of a house and into something better that suits their lifestyle better. They were both older people, but I really enjoyed helping them out, and that's the big goal here, is to help you guys find what you need. So again, introductions. I am Andy Goddard. I am a realtor. I started with Royal LePage last year and decided by the end of last year that I was going to switch to eXp Realty, which is one of the largest growing brokerages in the world. So it just gives me more tools to help you when it comes to buying and selling homes, right? So that's good. I've helped a lot of first-time home buyers I've helped. I really love helping first-time home buyers because I was one at one time, and I really wish I had somebody that knew a lot about this information. So I service Saskatoon and the surrounding areas. I do live out in Warman. I live here with my wife, my son, and my daughter, and our 2 dogs. So if you hear some weird noises, I apologize. That's probably my kid running around upstairs. But yeah, it's great. We love it out here. We love the area. I've called Saskatchewan my home my entire life. So that's just a little bit about me. Again, I'm going to put this here in the chat. I'm going to put my link to all of my information. So the Linktree address there, that has all my social media. So my Facebook's, Instagram, everything about me, social media for my business and my personal, just so you know exactly who it is you're talking with and you're working with. That's all right there. All my contact information, so it's easy to get a hold of me. And again, the booking link. So if we're going through this and you want to talk more one-on-one, just for the initial part, just book a call with me. Once we get that first initial conversation over, you're going to be able to talk to me at any time. You don't need to book a call with me again, just for the initial run. So this is me. And then we're going to get on to, we're going to go to Robin Kraft. Now, she is a mortgage broker. She's fantastic. She's working with me. We are a team. And so I deal with the real estate side of things, and she deals with the mortgage side of things. So she's going to be your go-to for anything financial. She is in the background here. She is in the chat. If you guys have any financing questions, please put it in the chat. As I'm going along, she will be answering these questions for you, so I don't get caught off. So feel free just to utilize the chat as much as you need for questions. But Robin Kraft, she's been doing this in the finance industry for over 20 years. She is now with iSask Mortgages. She switched there as well to a better company to better serve her clients as well. So we're just utilizing a lot of tools to help you guys serve you guys better. She also services Saskatoon and surrounding areas. She also lives out in Warman with her 2 kids. We literally live a few blocks from each other. So this is where we call home. So this is Robin. I'm going to put, again, same idea. I'm going to put her website so you can check her information out. And again, you can book a call with us with the booking link. So I'm going to be putting that booking link in periodically, so don't worry, it'll be there when you need it. So that's a little bit about us. That's we're a team here. We're going to be working together to help you for everything you need when it comes to buying a home. So now we're just going to get into, I'm going to do a very short version of what it takes to buy a home and the steps and the whole process of buying a home, just in a short version, just so you have an idea. So always step number one is learn what you can about buying a home. And this is a great step, is coming to this class, learning everything you can. I'm going to try and get as much information as I can for you. So always when somebody comes to me and asks me, hey, Andy, I'm looking to buy a house, what do I do? My first question always is, are you approved for a mortgage? Because without a mortgage or straight cash, we cannot buy a house. So if you haven't, I'm going to send you over to Robin and she's going to start the process. So we're going to see if you can qualify for the first time home buyers program, which I will cover here in a little bit. Then she's going to start the approval process, which we're going to discuss in a little bit as well. So once we get all that done and you are approved for a mortgage, she's going to let you know, you're going to let me know and say, Andy, we're approved for this much. We are excited. We're ready to start our house hunting search, which is perfect because I'm going to sit down with you, either it's on a phone call or Zoom like this, or face-to-face. We'll sit down and we'll discuss what it is you want in a home. Now, do you want a detached home, garage, townhouse, condos, little apartment condos, whatever it is to fit your lifestyle and your family? We're going to find the right thing for you. So then once we have an idea of what you need and how much, then I'm going to jump on to the MLS. We're going to look and I'm going to send you a bunch of properties, look everywhere I can to find a perfect place for you, get you in these homes, check them out. Once we find one that you really love and you're like, Andy, this is the one we want, this is going to be the best fit for us, we're ready to, to put an offer on it. So then we go back, my job kicks in even more. We see what we should offer, how much we're going to offer, what we're going to put in there for conditions. So home inspections, financing, whatever else we need in buying a home, we're going to put it in there. We're going to write up the offer. We're going to send it. We're going to go through negotiations with the other agent and come to a agreed on price. Once we have that, then what goes into about a 2-week condition period, which gives Robin enough time to finalize the financing, because we now have an actual purchase price. We know how much you're going to actually need for a mortgage loan, and we go from there. So it gives us time to do a house inspection and things like that. So once all our conditions are satisfied in that 2-week period, you guys are happy, financing is good, home inspection is good, whatever else we have in there is good. Then what we do is we lift conditions and we go on to pretty much just waiting for possession date. Now, possession date can be anywhere from a few weeks to a month to 2 months. It all depends on the situation, right? If the house is vacant, we can get you in as little as a few weeks. If the house has owners in it, then it all depends on how long it takes for them to get out, usually about a month. And if there's a tenant in there, then we got to worry about how long it takes for the tenant to get out when their lease is up and things like that. So just things to look for. But while we're in that process of waiting for possession date, about a week before, you will meet up with a lawyer, where we'll find you a lawyer if you don't have one. You go to his office, you sign the papers, get the title transferred over, pay the fees, pay the lawyer fees, and then we're ready to go. Once possession date gets there, I get the notification from the other side saying everything's good, keys are released. I go pick up keys, and then I meet you at your new home. So, I mean, it's a lot. It's definitely a lot. And it's a very, it seems like a quick process, but it takes quite a bit, but I'm going to make sure that's a whole smooth process. So again, if anybody has any questions on anything, feel free to throw it in the chat, or, go ahead and book a call with us. We'll talk more about it, but that's kind of the whole process in a nutshell. What we also do upon possession date is we do a full walkthrough of the house. We check every room in the house, inside, outside, just to make sure that everything's good, because if there's something that doesn't seem right, like maybe we walk in there and all of a sudden the hot water heater is leaking everywhere, well, we can go back and make sure they fix that for us, right? So we just want to make sure we do a good walkthrough of the home. Once you guys are happy, I leave you with the keys and I'm out of there, and we're good to go. So that's it. That's the home buying process in a very, very, very quick form. So again, anybody has questions on that, feel free, throw it in the chat or book a call with us and we'll discuss it even further. But if not, we're going to start moving on to some things about financing side first. There's about 3 things about the financing side, and we're going to jump into the real estate side. So I guess if you want to call these mistakes, but these are just some things to look for. So mistake number 1 on the financing side of things is ignoring this first-time home buyer incentive program. Now, does anybody know what this is or have ever heard about it? We're in Saskatchewan. Saskatchewan's still the most calm and leveled out province in Canada when it comes to home prices. Like, we're not going to see the effects of the values of properties like you're seeing it over in Ontario and BC, where it's just completely roller coaster there. No, Saskatchewan's fairly level playing field right now. So it is easier to find a place. It has kind of leveled off a bit from what it was, I want to say a few months ago when things were just moving like crazy. Now it's a lot easier to look for property now than it was a few months ago. So it's definitely benefiting buyers a little bit more now. So that's a good thing. But so yeah, so this first time home buyers incentive program, if anybody's heard of it, perfect. If not, I'm going to walk you through what this is. So the government of Canada has put this first time home buyers incentive program out, and so far they've used about $1.25 billion worth of their own funds to help make home ownership more affordable. So that number is a bit dated now. It's probably a little bit more than that now. So how does it work? That's a good question. Yeah, I'll get into it a little bit too, but there is what's called a new to Canada program. So if anybody's been here for less than 5 years, there is a new to Canada program, which I'll touch a little bit on here as we go along. So no worries there. So this first time home buyer incentive program is basically, it's a shared equity mortgage. So the government of Canada is going to invest in your property. So it's going to have a shared investment in both the upside and downside of your property value. So the money they give you is not interest bearing. It has no regular payments to make on it, and you can repay it at any time without any payout penalties. So basically what they do is you're going to give down payment. So the minimum down payment is 5% of the purchase price. What they're going to do for resale homes, for used homes, is they're going to give you an additional 5% of a down payment. And I'm going to explain why this is going to be really beneficial. But that's basically what this is. They're going to give you a 5% down payment and share an investment in your home value. And who can apply for this? So basically anybody who's a Canadian citizen, a permanent resident, a non-permanent residents who are legally authorized to work in Canada can apply for this. If you and let's say your spouse are going in to buy a home together, at least one of you cannot have owned a home before. But so as long as one of you qualifies for first-time home buyer. If you're going in with your spouse, as long as your combined annual income doesn't exceed $120,000 a year, because the government feels that if you make over $120,000 a year combined, you don't need their help. So just something to watch out for as well. The combined insured mortgage and incentive amount cannot exceed 4 times the total qualified annual income. You just can't, buy something that's 4 times what you guys make a year, over 4 times that. The maximum down payment, including the incentive they give you, cannot exceed 19.9% because this program cannot be used to avoid CMHC insurance premiums. So basically, anything from 20% down payment and less, you have to pay insurance premiums on. Anything over 20% for down payment, you don't have to pay insurance premiums on. This program is not going to let you get over that. So if you're going to put 15% down, they're not going to give you the 5%. They're only going to give you 4.9 just so you don't go over 20%. And I'll explain a little bit more about that as we go along. Something else for down payments, which again, I will talk more about too, but there's another first-time home buyer program, and it's using your RSPs. So if you have RSPs saved up, per person can withdraw up to $35,000 of your own RSPs under this first-time home buyers plan. So they're not exclusive. So if you want to use your RSPs as a down payment and this first-time home buyers program, you can use them both at the same time. They're not exclusive, and they both define first-time home buyer the same way. So that's just an option for a down payment. Again, I will get into that. But the only difference between this and the first-time home buyers incentive plan, if you're using your RRSPs, you have to start paying them back within the first 2 years of using them. So once the 2 years are up after using them, you got to start paying it back. But you can just pay it back in installments, in chunks as you want. You don't have to pay it all back at one shot. So that's a little bit different there. Also, your RSPs have to have been in an account for 90 days minimum. So if they were just put in, you can't use them until 90 days. Okay, so just a couple things on that. Okay, so back to the initial home buyer incentive plan. So when do you pay it off? So basically there's 3 ways to pay it off. Either when you go to sell your home, like say in the next 5 or 6 years after buying, you want to sell it, you can pay it off using the proceeds of your sale, or anytime in the first 25 years of your mortgage by way of either a lump sum, or you can refinance your mortgage to pay it off that way. Or if you live in the house all the way to the end of 25-year term of your mortgage, you can pay it off by, again, either a lump sum payment or taking out a small equity loan. So those are 3 ways you can pay it back. And again, you cannot pay it back in installments, and I'll explain why right away here. So I want to explain how this works when I talked about how the investment works. So we're going to use a house valued at $400,000, easy math. So the minimum down payment for a $400,000 home is $20,000. So that's the amount. So they're going to give you an additional 5%, which is $20,000. So at the time they want the value of your house to rise, because if your value of your home rises, they're going to get a little bit more money back, right? So if you're at the time of paying it off, if your house is now valued at $500,000, they're going to want $25,000 back. They're going to want 5% of the value of your home at the time of paying it off. Okay, so the more your house value rises, the more their investment in your home is going to grow, right? So on the flip side of that, if your home value falls from 400,000 to 300,000, you only have to pay back 15,000 instead of the initial 20,000. But we're not going into this with the value of your home lowering, right? They want to see your home grow. We want to see the value of your home grow, but that's just things to look out for. So that's why you can't pay it off in installments, because they need to know how much your house is worth at the time of paying it back. Okay, so just a little bit to watch out for when they give you this 5%. You pay it off based on the value of the home at the time of paying it off. Okay, again, if anybody has any questions on this, put in the chat. We'll definitely explain more of it. So I guess, there could be a lot of people now asking, well, where's the benefit of this? Or they're going to give us money. How does it benefit us? So here's an example of how it's going to benefit you. Again, we're going to use the purchase price of a home at $400,000. So you're going to put your minimum down payment of $20,000 in. And then, so you put $20,000 off of $400,000, you're going to have to take out a mortgage loan of $380,000. Okay. Now, if the government is going to kick in an additional 5%, well, now your down payment is now $40,000. So now instead of borrowing $380,000, you only have to borrow $360,000. So now your monthly payments are now cheaper than they were previously without their help. And again, we talked about those mortgage insurance premiums. So mortgage insurance premiums are at an all-time high if you're putting the bare minimum 5% down, right? They're going to be at their highest. But the more you put down, the less mortgage premiums you're paying are. So at 10% down, now your mortgage insurance premiums are dropped. You have to borrow less from the bank, right? So now you're borrowing less. So basically what they're doing is they're helping you for the first few years with a lower payment to get into your first home, right? You will have to pay the money back eventually, but they're just trying to give you a little bit of a helping hand, a little less payments at the start, okay? So that's kind of how the first-time home buyer incentive program works. It's just to help you guys out a little bit. Yes, so again, for down payments, which I will get into again, the minimum down payment you need is 5%. The government of Canada is kicking in an additional 5%. So your total down payment is going to be 10%. But if you put whatever you want down, if you're going to put 5% down or 10% down, they're going to give you 5% of the purchase price, right? So no matter what, at a $400,000 house, they're going to give you $20,000 for it at the time of purchase, right? You just got to watch when you go to pay that 5% back, what the value of your home is at the time. So it could, if your house value rises, that amount you got to pay back rises, right? So that's kind of how that works. So if anybody has any more questions on the first-time home buyers incentive program, again, feel free to reach out for us. I'm going to throw it in here again. Book a call with us if you want to know more about that. Yeah, and I'll get into, by the end of this, I'll get into some more closing costs, but there are closing costs to this. The nice thing about working with on the buyer side is you don't pay realtor fees, right? So you don't have to worry about our fees. You don't pay our mortgage broker for their fees, right? So you don't pay us for our fees. The closing costs are just going to be at the end with the lawyer where they transfer titles and they get the mortgage and all that secured. There's going to be closing costs to that, but I'll get into a little bit more of what to look for costs. And really, it's besides the closing costs with the lawyer and a home inspection, when it comes to buying a home, that's usually about it, right? Yeah, so keep going with these questions. I know if they're financial, I'm going to let Robin take over so we don't run out of time here, but I'm going to keep moving on. I'll let Robin keep answering these for us. And I'm going to get into, we're going to get into mortgage approval now to discuss a little bit about that. So again, mistake number 2 is I've had people come in and, say we want to go look at a house, but they haven't been approved for a mortgage. So the biggest mistake is not having pre-approval first, because, might sound blunt and things like that, but it is pretty much it's kind of a waste of time, right? You're going to waste your time, our time, and even the seller's time, especially if there's somebody living in the house and we got to kick them out to look because we don't even know if we can buy the place, right? So like I said at the start, first steps is always get pre-approval, always. And I'll explain a lot of benefits for working with a mortgage broker compared to a bank and things like that. So there's 3 things about a mortgage approval to look for. So this is kind of the base steps of what they look for. So they're going to look at 3 different things. They're going to look at your credit. So they want to know your credit history. They want to know how much debt you have, how many credit cards you have, lines of credits, vehicle payments, all that they want to look at to make sure that you're not way overspending. We can't have any room to lend you more money, right? So they're going to look at the credit. Usually they like to see anywhere from a credit score of 620 to 650 to start. Anything over that, great. Anything less, there's a chance they can work with you. However, there's also other options to help as well, which I'll get into. Second thing is they're going to look at your income, right? So how much you make in a year. So if you're not in a salary position or your work, you have your own business or something like that, they're going to want to see at least 2 years worth of income tax statements to see how much it is you make over the span of the last 2 years. If you have a salary position, that's even better because you can get a letter from your employer stating this is my salary. It's not going to change from here to here, right? Like this is what I'm going to be making every month. So that's way better to have. If you're working hourly, that doesn't count as salary because hourly fluctuates too much. It's either, how many hours you work. You work an 8-hour day, a 6-hour day, a 10-hour day, took time off here, added days here, right? So they, that's why they need the 2 years worth of income statements. Now, people that are new to Canada, because you haven't been here for 2 years, that's where this new to Canada program comes in. It's basically to help people that are coming over and they don't have that the 2 years worth of income statements or just kind of started working, right? The new to Canada program is here to help you for that. Okay, so there are a couple things with that. Basically, you have to be at the job for 90 days minimum, right? So you got to get through your probation period. And also the funds that you're using for a down payment have to have been an account in Canada, in a Canadian account for 90 days minimum. So the full amount has to be in there. If you're constantly bringing money in and feeding that account, it doesn't start the 90-day countdown till the last cent is put in there, right? So if you need $20,000 for a down payment, you have to have $20,000 in there for 90 days. But that's just, just so you know, for the new to Canada program, just a couple things we can talk about. So they're going to look at your credit, your income, and then third and final, the big one, they're going to look at your down payment, where it's coming from and things like that. So I've always had that, everybody asks about down payment. So there are a few ways you can get it. The main one is obviously your own savings. You've been saving up, a big purchase. You want to put it towards something. And honestly, buying your own home, building equity in your home is great. And so this is a great thing to spend your money on, right? So your own savings for a down payment is the main one. Number 2, as I spoke of before, you can use your RRSPs if you have any for a down payment. And number 3 is, we like to call it the bank of mom and dad, right? But if you have an immediate family member that's willing to give you a gift or a down payment, that's you can be used as well. The only thing is you just have to say it's a gift from them. You can't say you're borrowing money from them, because if you say you're borrowing money for a down payment, they're going to put that against your lending power, thinking it just goes towards your more debt, right? So if somebody's going to gift you money for a down payment, but you are going to pay them back, that is just between you and the person who's giving you the money. But according to the lenders, it just has to be a gift. Okay, so just some things to watch with that. So those are the three main things. There is a fourth way for a down payment, but this is more, I want to say, inclusive, right? So if you're a part of the Métis Society of Canada, they have a grant out there right now that is giving up to $15,000 for a down payment. All right. So if you're a part of the Métis Society, we can look into that. If you want to know more about that, reach out to me. I will definitely send you the information I have on it. But basically, you just have to qualify for a mortgage and qualify for their grant. So basically, it kind of goes hand in hand. You go apply for a mortgage and say, I'm going to use the Métis grant, and they'll just use that as your down payment, right? So just a little information if anybody's part of the Métis Society, that's something to look out for as well. Okay, so those are the three, main things that we're going to look for. And so they're underwritten. They're going to, again, review your income. They're going to review your credit. They're going to review your down payment source. The nice thing about these pre-approvals, they're reliable. And they're going to tell you the maximum amount that we can shop around for. That's the big one, is that now we know exactly our range that we can shop for a home, right? We know the maximum amount and we can go from there, right? The nice thing about the savings is we can shop with confidence, and it's priceless, because there's nothing worse than going into house hunting, looking at houses that are outside of our price range, not knowing it, then all of a sudden finding out that, oh, that's a bit too much. We have to shop for something less. You know, it's very hard to get back into shopping for a home when you've had to go from one to another. So just is why it's such a good thing to have a pre-approval at the start. That's the main thing to get going first. Another couple things, I've had a few questions about cosigners. So it is a thing, it's possible. So if your credit's not the best, as we talked about earlier, 620 to 650, if it's a little lower, you can definitely have a family member cosign for you. That is definitely an option, right? So we would just have to sit with them, because there are risks for the cosigners for being a cosigner, right? If you miss your payments, they're going to come after the cosigner for payments, right? It is a risk, but it's something that we'd have to sit down and talk for. But it is possible. So basically, as long as your family member they live in Canada, they have an income, and they're able to also be approved for a mortgage, they can be a cosigner for you. You can still use them and use the first-time homebuyers program, as long as you and your cosigners amount that you earn per year doesn't exceed that $120,000 mark. Okay, again, you still got to watch for that. But you can still use a first-time homebuyers program with a cosigner. And they're committed to being your cosigner for as long as you can't be approved on your own. But once you can be approved on your own, you definitely can go ahead and get them off and, get them away, and then they're free and clear of that. The only extra cost to having a cosigner is basically the cost of getting them off the title at the end, right? Because they want your name only on the title. So you want to get your cosigners off that and just have it your own title. So that's going to be the extra cost, just a couple $100 at the lawyer's office to get your name on the title alone. So if you guys have any questions about cosigners, again, feel free to reach out to us. That is an option if your credit just isn't quite there yet. Also, if you feel your credit's not quite there and you need a little bit of help with it, again, reach out to us. We know some fantastic financial advisors that can get you there even faster. So we have definitely a lot of resources to help out with it, right? Cosigners, you only need a cosigner if your credit isn't, like, if your credit's really low, and to help you get a mortgage approval, they would just help you out with that. That's what the cosigners are for. So if you don't need one, even better. It's much better not to have one, but it's just for an option if your credit's not there. Okay, so that's kind of the option for a cosigner. That's about, I want to say about it for just the mortgage approval part. There is more to it we're going to cover, but that's just kind of the basics of how it works, what they look for, and things you need to get approved for a mortgage. So I see there's a lot of questions coming in, and thank you, Robin, again, for answering these as we go. I'll try to get to them as I can, but yeah, thank you. So again, yeah, that would be where the New to Canada program would come in to help you out, right? This is if you're new to Canada, fresh into Canada, definitely, yes, reach out to us. We'll definitely explain how it works and how we can still help you be approved for a mortgage without any credit history here. That's the whole value of the New to Canada program. Here, I'll put it in again. here's the book a call link. Feel free to reach out to us and we'll explain it more. But yes, as long as you're under 5 years, we can definitely use that. So I'm going to continue moving on here, just so we're not going to run over time here. Mistake number 3 with the finance side of things, is using your bank. Now, there's nothing wrong with using your bank. I have a bank that I use for all my, where all my money goes into and out of, mostly out of more of the days now. But there's nothing wrong with using it. They have their own in-house people, but I want to explain some things to watch for when you use your bank and how mortgage broker like Robin can definitely help you out a little bit more than your bank can. And I shouldn't say a little bit more, quite a bit more than what your bank can do. But I'll touch on that here. So I just want to run a couple scenarios by you here before we get a little further. There's 2 little scenarios here. On the left, this lady owned her own business. Now, when COVID hit in 2020, like everybody took a big hit. Well, because she owned her own business, her business took a massive hit to the point that she had to shut it down because of COVID. In her house, she had a basement suite that she had rented out. But again, once they locked down everything, the tenant decided to move out and go live with family. So there went her rental income. She also had a room rented out for Airbnb, so people traveling can come and stay at her place. But again, with lockdowns, traveling was non-existent. So in a very short amount of time, she lost her main source of income with her business. Her tenant left, so her rental income just went away, and her Airbnb income just went away. So that is a lot to take on when you have nothing coming in. So she felt she had no other option but to sell her home. What she didn't know was that prepaying out her mortgage, there was a $30,000 penalty to that. She had no idea that was there. When you're relying on the sale proceeds of your home that you've built equity in over so many years, you don't want to be hit with a massive penalty like that, especially when you're relying on it. So it's just some things we'll be able to look for you to make sure that you're not going to be hit like that. Same kind of idea on the right. This family lived in Edmonton. So they're from Haiti. They had a lot of nonprofit dealings in Haiti back where they're from. So they always helped down there. When the earthquakes in Haiti hit a few years ago, they were approached and asked to run an orphanage down there. So they felt they're going to sell their home, use the proceeds of the sale of their home to fund them living there for a few years. What they didn't realize is that there was going to be a $17,000 payout penalty on their mortgage. Again, same idea. When you are relying on the sale proceeds of your home to fund whatever it is you need to fund, and you don't know there's a big hit at the end, that can be very, very devastating. So it's just things that we are going to watch out for you. That's what we do for you. Okay, so just so you're aware, bank penalties can be very expensive. They tend to be a little bit higher. So we want to make sure we have the ability to shop around for different lenders to make sure you have little to zero payout penalties. We cannot guarantee zero payout penalties, but at least we can watch and find you low ones, because they're, like everybody, we all have reasons to move, right? And usually when it comes to buying your first home, it's your first home. That's why they call it the first home. And chances are you're going to either outgrow it, or you want something different, or a life change, right? You're moving, whatever it is, there's always reasons you want to get out of it and get into something else. So we want to make sure you have the freedom to move around and not pay big penalties to do so. So that's just something we do for you to help you out, right? Yes, the penalties would have been stated in the contract. So somebody in those 2 scenarios probably wasn't doing their job very well, right? Those 2 scenarios, they were involved with big banks. I can't tell you what the names of the banks are for liability reasons, but yes, there would have been in the contract, but they just were not explained very clearly. So we are going to make sure to watch out for that for you. So again, if you guys want, I'm going to put it in here. Book a call with us if you want to know more, but I'm going to explain a little bit of more differences between a bank and a mortgage broker. So this is where the big thing is. So a mortgage broker is a lot like a realtor. Okay, you access us very, very easily. So she has access to at least 30 different lenders' products. She works the same hours as I do. So if you need us at it's 7:36 right now. If you need me right now and I'm not tied up doing a webinar, right, you can get a hold of me. All right, you can get a hold of her as a mortgage broker, right? If you need answers now, you're going to get them now. she's going to offer you the best mortgage rate up front. So whatever the mortgage rate is, she's going to give you the best one. They work for you. And as I mentioned earlier, we work for you and our services are free. You do not pay us any fees to work with us. Okay. You can call or text us anytime with any questions. Now, a bank, here's a difference. The banks are restricted their in-house products, whether it's RBC, Scotiabank, TD, they all have their own products they want to sell, and that's what they use, right? They work normal bank hours. So, traditionally it was always, 9 to 5 or 8 to 5 or whatever it is. So anytime after 5 to 5:30, good luck getting a hold of them. And they offer their bank posted rate. So you may need to negotiate to get a better rate because they want to make money, right? That's the idea. So whereas the mortgage broker gives you the best rates up front, they're going to offer you normally a higher rate, right? So just things to watch out for. They're also personal brokers of the bank. So they're, yes, they're working for you, but they're also working for the best interests of their employer, right? Whereas mortgage brokers work for themselves, make sure that that you are being taken care of. And they are definitely harder to get a hold of. And a very, very good example that just happened to me yesterday. I was helping, we were doing what was called a presentation of offers. So basically just at the time of buying this home, let's say at 5 o'clock, we were going to submit all the offers. So I think there was our offer plus 3 other offers were coming in. We submitted our offer and they really, really liked our offer, but they wanted a couple things changed, but we needed to get a hold of their finance person, and their finance person worked for the bank. It was literally, this was about 24 hours ago. It was 7:30 last night, and we needed an answer from them, and they were gone. They wouldn't, we called their numbers that they gave us, and it just went to their office and says, we're out of the office for the night. So, if you were working with Robin or whatever, any mortgage broker, we could easily picked up that phone and said, hey, we need this, and it would have been done. But because she was dealing with a bank, we couldn't get a hold of them until this morning. Luckily, the sellers were very accommodating for us. So we were able to, but we ended up still not getting an answer until 5 o'clock this evening to get an answer to them. And we could have had this done last night or the morning. So just some things to think about. Again, there's nothing wrong with going to your bank because I've had lots of people be with their bank for years and they've known the people there. That's fine. You can always go and talk to them and see what they offer you and bring it over to Robin or whoever, right? You bring it over to Robin and she'll be able to either, hopefully she can match it or better. If she can't, well then, okay. But that's just some things to think about when you're using your bank to get your mortgage. It was kind of I wouldn't say a disaster yesterday, but it was quite a nightmare. So that's just some benefits to using a mortgage broker. They can shop around, get you way better rates, and you can access us anytime, and our services are free for you. So that's it's a very good reason to go with them, right? We're here to serve you. We're here to make this process as smooth as possible. So why not use all the tools at your disposal? So again, if you want to talk to us, book a call with us and we can talk more about that. But that is basically the finance side of this. There's a lot more that can be put into it, but again, we're getting a little bit running a little behind schedule here, so we're gonna get moving. But yeah, feel free to book a call with us. We can talk a lot more about what you need personally as finances go, and we go from there. But if anybody else has any questions, I'm going to move on to the real estate side of things. That is a good question. Yes, thanks, Robin. Yes. What is it? Canada, US banks, and I think, was it Britain? Great Britain, I think. Yeah. So those are the three. When I said earlier that your funds have to be in an account for 90 days, Canadian funds, if they're in US funds or Great Britain funds, those are also accepted. So there's only those three. So there could be a couple others, but yes, if let's say, Nigeria, India are some that come up to mind that I've dealt with in the past, and they weren't approved, right? It's just there's only a select few, but it's just easier if you're going to bring funds in to have it in Canadian funds. But yes, US and Great Britain funds are also accepted. So that's a good question. That's fine. Yes. The two I've ran into for issues so far, I believe that we've run into was the funds were either in India still, and the other person, the funds were in Nigeria still, and they weren't approved. They'd had to be over into the account for 90 days. So just some things to think about when you're needing it. It's best to get it if you're bringing money over. And as I said earlier, if you're bringing money over into the funds, until the last cent that you're using is in the account, the 90 days wait period doesn't start until it's all in there. So if you're starting with $10,000 and you're constantly adding some, it'll just, every time you add more money to it, it just resets the counter if you're using that money. So just some things to think about. But yes, keep throwing more questions in the chat. Robin will still be here, able to help you out with those. We need to move on a little bit more, and then we'll get into the real estate side of things. So the mistake number 4, which would be number 1 on the real estate side of things, is buying directly from a builder. I don't touch a lot on new builds because majority of first-time home buyers don't go directly to a brand new home. It's just, you know, there are some that do, but it's rare these days. But I need to touch on it just so you guys have an idea. So I find builders are a lot like banks, right? Difference between a banker and a mortgage broker is that there's a ton of builders out there, and these builders will sell their product and their product alone. Whereas I can take you to all the different builders and look for places, right? I can show you which builders are the good ones and which builders are the bad ones. I can't tell you that again in this webinar because it's recorded. And if they ever found out I dropped their name and it's bad, oh, that's going to be a bad phone call. But anyways, I can at least give you that idea. And that, you know, we want to make sure your first home is one that fits you the best. So instead of being bottleneck to one builder and their product, I'm going to show you everything from all different new builds to resale homes, whatever's going to be the best fit for you. So again, as a realtor and you're using me to buy your home, I work for you. I have the best interest of you at hand all the time. Whereas builders are going to try and sell their product and their product alone just to make sure you buy it, right? So just an idea to think about. So builders are going to offer some packages too. So I bring a lot of knowledge to the table with that. So there's usually when you buy a new build, there's most of the stuff isn't finished. You're going to get the bare bones. The main levels are going to be there, but your basement's usually not going to be finished. There's not going to be a garage, and your landscaping isn't going to be finished, right? So they're going to offer these as packages. So you want to add a basement, a finished basement, it's going to cost you this much with our package. You want a garage, it's going to cost us this much with your package. All that kind of stuff. So we can go in there and look and be like, okay, they're offering a basement package for this much. Well, you know, I know a lot of people, I know a lot of contractors. Like as realtors and mortgage brokers, we know a ton of different people from every kind of, you know, electricians, plumbers, construction, finished carpenters, painters, whatever, you name it, we know some, right? So we can find, maybe they're offering a really good deal and it's good to go and you should take that deal. Or maybe, hey, I think we could probably get this done cheaper. You know, things like that I can bring to the table for the knowledge. And some people have asked too, does it cost any more or do we save money by going straight to the builder instead of bringing a realtor with us? And frankly, no, because the builders know that realtors sell their places a lot. So they kind of build our fees in a sense into their contracts. So it's going to be the same amount whether you bring me or bring them. But with me, I bring the negotiations, right? So sometimes we can negotiate in appliance packages because new builds don't come with appliances. Again, it's a package. So maybe, you know, it's like, oh, it's 400,000. Well, let's say 600,000 for a brand new home, but we'll pay 600,000, but we want an appliance package put in there, right? Because they usually don't like to budge much on price, but they're willing to negotiate other things like packages. So it's just things that I can bring to the table to help you out, right? So it's just, again, I've got your back and I'll make sure what you get into is the right home for you. So again, that's just the thing that I'm going to help you with. But again, I don't touch a lot on new builds just because we don't really, you know, first time home buyers usually don't go straight to a builder, but I just figured I should touch on that a little bit. So if anybody's got any questions on new builds, feel free to ask. Oh yeah, sorry, I did forget the one thing too. Some new builds in their contracts state it's like a purchase. Let's say the purchase price is 500,000. But there's a stipulation there that with lumber and material prices rise, so will the cost of your home to go up. So let's say we've negotiated at 500,000, that's what's in there, but there's a clause there that the lumber has risen up a little bit. So now the value of the home is now going to go up. So we said 500,000, price of lumber just rose. Now your house is 525,000 or 530 or something like that. It's things to watch out for like that. When the prices of lumber can go up, so can the value of the house that we've already agreed on, right? So just things we got to look at contracts. Um, Victor, it's honestly it's preference based, right? If you're approved for enough to buy a brand new home, there's nothing to say that, hey, let's, avoid that altogether. We can definitely go. We can shop for everything, right? When we're ready to buy, we can go look at resale homes, we can go look at new builds just to see what's the right fit for you, as long as we've got the approval, the mortgage approval to do it, right? When it comes to new homes, it's like anything. It's like buying a car, right? You can buy a used car and it's been used already, but it's still good. It still works. It's been checked over, right? Same with the house. It's used. It works good. But a new build, same idea, but it's brand new, and you get that new home warranty on it. So in the first, year or two, if something breaks, they're going to replace it, right? But other than that, it all comes down to straight preference, right? What it is that you want in a home, right? So I wouldn't say it's a terrible idea. It's not a terrible idea to buy a new home, right? As long as you can afford it, why not? So yeah, it's just things to think about. So yeah, I'll get on with it. This is one of the big ones that I like to talk about, is skipping a home inspection. So home inspections, I don't know if anybody knows or heard of how much. You know what? Let me know in the chat if anybody knows how much does a home inspection cost. And then we're just going to use just a regular detached 3-bedroom, 2-bathroom home. Let's just go with that. Does anybody have an idea how much a home inspection costs? Yeah, and we're close. Yeah, I got 300, we got 500. Yeah, it's around there. I've had the average that I found from some home inspectors is the average for a normal detached home is about $425 plus GST. Might be 475, but it's somewhere around there, right? For a detached home. And now if you go over a certain square footage, like I think if you go over 2,000 square feet, it goes up a little bit more after that, but that's the average for a normal detached home. Condos are about 300 bucks, and townhouses are about the $400 too. So it ranges anywhere from $300 to $400 and $500 depending on what you're buying. And I know some people have said, well, it seems like a lot of money, but honestly, when you're going to buy a home, the home itself is probably the best investment you're going to make in your life. But a home inspection is almost a second best, because the home that you're buying is going to be one of the most expensive things that you buy in your life, which I've mentioned before. So why not make sure that it's sound, right? So when I mentioned before about conditions, home inspection is a condition. If it's not satisfied to you, if it's a terrible home inspection, let's say we open up the attic and it is completely full of mold, we can walk away from that saying we do not want to deal with that. That is a lot of money to fix, especially if the sellers aren't willing to fix it. Then we can walk away from it. Your deposit stays safe and we go find another place, right? So home inspection is a condition. If it's not satisfied, we don't buy the home. Simple as that. So just a couple things about them. The nice thing about it too is that once the home inspection is done, and they're going to find something in every home, right? Used homes are always going to find something, but most of it is just minor cosmetic things to deal with later on. It's not a pressing need now, but the things that we find in there, that if it is pressing and needs to be fixed before move in, then we can go back in negotiation. So either we go back and ask the sellers to fix it before we move in, or if they don't live in the house anymore, they don't want to deal with it, they might just knock some money off the purchase price, right? It's kind of a give and take, right? So an example is, let's say the hot water heater is ready to go, it's on its way out, it needs to be replaced. Well, it's still working. We just don't know when it's going to go out, but we know it's going to go out soon. We can negotiate like $600, because roughly a hot water heater is about anywhere from $1,200 to $1,500 to fix and replace. So let's just go $600 off the purchase price. We'll cover half of it, kind of deal. Or if it's like completely shot, then we can just say we want you to replace the hot water heater, and we can go into negotiations there, right? So anything like that, if it's electrical issues, things like that. So I'll give you a couple of examples too, some more, but these home inspectors don't miss a thing. They're able to see so much that we don't usually see. So when we're doing a walkthrough of a house, when we're looking at it, I let you guys go, we kind of walk around, check out the rooms, but as we're looking, because I've done it enough times, I'm looking at everything else. I'm looking if there's water damage on the ceiling, if something looks out of place, looking to see how things, are structurally with the house, right? Instead of just what it looks like, right? So I got to have that going on in the background for you. But these guys will come in and they can see into walls with their infrared technology. They can tell you if there's insulation missing. They can tell you if there's water damage anywhere, either in the ceiling or in the walls, right? They can tell you so much. It is a huge book on everything about your house and how to maintain your house and things going forward. So couple things. I'll use an example of a recent house that I just helped new first-time home buyers buy. We went and did a walkthrough. They loved the house. We got the house through negotiations, all that stuff. We did the house inspection, and what was those three? Oh, it was so in the electrical panel, the dryer was on two separate breakers. It's supposed to be on a pole breaker, so if it trips the breaker, both the breakers trip. It wasn't. It was on two separate ones. So if something happened with the dryer and it tripped half the breaker, then it's running on half power, right? So then it could be a big issue. So we're like, that's dangerous. We want that fixed. There was a vent from the bathroom that sucked all the moisture from the bathroom up through the roof and out the vent. Well, it wasn't quite attached to the vent to the roof. It was kind of off a bit. So all that steam from the bathroom was getting sucked into the attic, and then it gets mold issues later on down the road, condensation in the wintertime. So that was a bit of an issue. So we wanted that fixed before move in. And then the last one was, it was water taps to the water, or to the dryer. So the hot water tap was seized open. We couldn't open or close it. So we wanted that fixed because they were going to bring their own washer and dryer with them and replace them. So we were able to go to the seller and say, yeah, we want these three things fixed. Everything else about the home inspection, they're okay with, and they can deal with that later on. But those are the three pressing things we need fixed. And they came back and says, yep, that's reasonable. We're going to fix them for you. And they did, gave us pictures, gave us proof, and yeah, we were good to go. So that's some things like that. Oh, let's see. I just want to answer this question because it's a good one. Yeah. That's the owner Reese. The windows, like, windows are a little harder because unless they're broken, right? So when we do the walkthrough of a house, we're always looking at things. I look at the price that they're offering it at. I'm looking at what has been sold in the area to see if that price that they're asking is, acceptable, right? Is there something? But if we're walking around, we see, okay, the windows are very dated and will be needing to be replaced. Well, that's probably going to be reflected in the price they're asking for, right? Or if it's not, then we will submit an offer that reflects the fact that we have to change windows, or the shingles are going to need to be replaced in, a year from now because they're just completely shot. We will reflect that in the offer. So basically, with the home inspection is going to show you what's wrong with it that we need fixed right away or down the road that we can negotiate with. But things like windows and stuff like that, that would more reflect in the offer. Unless there is a broken window or a broken door or something like that, then we can ask for that to be replaced. But yes, anything that we look at will be reflected on the offer that we submit. That's kind of the deal with that. No. So the house inspection is strictly structural and the workings of the house. They have nothing to do with price or anything like that. We will justify the price in a sense, like, because we have access to what's been sold in the last, all the way back till the 90s, I believe. I haven't seen how far back I can go, but we can definitely see far back what's been sold, so we can reflect that. Yes, sorry, yes. And that's the appraisal will also do that too. Yeah, thanks, Robin, for that. Getting sidetracked on that, but yes. No, the house inspection is just strictly to tell you how your house is functioning, right? They also, another thing is, I've had it before, but the house inspectors do not provide quotes either. So if they say like this electrical panel needs to be replaced, they may give you a general idea, like anywhere from $1,000 to $5,000 depending on it, but they can't give you an actual quote. So if we need something fixed and need a quote for it, we'd have to get an actual electrician, plumber, carpenter, whatever needs to come in there, right? The house inspectors are just there to show you what's functioning in the house, what needs to be looked at, safety issues, right? How things are. So that's why they're so important. But yeah, it's another one that we had was there were some issues in the basement, some wiring issues on some plugs and things like that. So we went back and said, we want these things fixed. Well, the owner doesn't live there anymore, lives in a different province. So they said, you know what, I'm not even going to deal with that because it'd just be too much for me to do. So we're going to knock off like $2,000 off the purchase price. And that's also a way to go about it as well. So if they're not willing to fix it, we negotiate either maybe the price off that, right? So those are some things to help with this home inspection. So instead of just walking away from it because of a few things, we can just go and negotiate either them to fix it or a better price, right? Just things like that. So we get a house inspection. So once we get an offer and once we find a house, you love it, you want to put an offer in it, we get an offer out there and it's accepted and we have an actual accepted offer and the conditions start, then we line up an inspector. So we wait till we actually have an accepted offer on a house and then we get an inspector. And so lately they've been booking about a week and a half in. So then that's when we get it done. So it's just before we lift conditions, we'll have that ready to go, right? So, and that's when you pay them is at the point of after they're done their inspection, right? So it's about a week to 2 weeks after we get an accepted offer. But yeah, they're just, $300 to $500 on one of your biggest investments you're going to make is just a no-brainer. It's just the amount that they're going to give you for information is great. I'll even use my own house as an example. When I bought this, it's built in 2012, so it's 10 years old now, but when we bought it in 2016, it was only 4 years old. But he noticed using his infrared camera that on our main floor bathroom, there was water leaking down from our ensuite bathroom upstairs. So he noticed that there was water leaking, very, very small enough, but it was going there. And eventually after a while, it would do a lot of damage. So we looked at it and basically all that happened was there was just not enough caulking around the shower from the bottom of the shower to the wall. It was literally like that much. We just sealed that up and the leak stopped. And it didn't cost me really, besides the cost of the home inspection, it cost me a few cents worth of caulking to fix that. And there was no leak. We've had him come back to look at it later on. And he says, yeah, there's nothing there. But if I didn't get a home inspection, we would not have known that was there until basically the ceiling caved in because of water. It's crazy that these guys don't miss a thing. Every time I do a home inspection, I always learn something new. It's crazy. And I've done home inspections from houses built in 1917 all the way up to 2015, 2016, right? So there's such a range, but they always find something, but it's so worth it to have it so you know what you need to be done, right? So yeah, it's big. So if anybody has any questions on home inspections, please feel free to let me know. We can talk some more about it, but that's kind of the basis of it. We can go back, it's built in the conditions, we can offer less money on it to fix things or get them to fix it, right? So it can save you a ton of money, especially if you don't know something's wrong with your place upon move-in. So huge thing. So then we're going to get to the final thing because we are running a little bit past our time. So I'm going to kind of go through this a little bit faster. But the last thing is if we're buying a condo. Now, condos can be anything, not just apartment style condos, but townhouses. There are even some detached homes these days that are part of condo corporations. So this is very good to know about. The nice thing about these condo reviews, we call them a Schedule C. They're also known as an estoppel package. Basically, it comes with all the information of the condo that you're buying, right? So it's free. You don't have to pay for it. The sellers pay for it. They get it when we ask. Like once we get, again, an accepted offer, these Schedule Cs, as long as there's a condo that we're buying, it is built into the offer to purchase contract. So it's not a mandatory thing, or it's not a optional thing. It's mandatory that we get this. The only thing that's optional is sending it over for a lawyer to review. But again, just like the house inspection, I highly recommend getting a lawyer to look at this because I have an idea of what's in these, but because there's so much workings of what goes on with it, a lawyer needs to review that to make sure. And they have seen some things there that to watch out for, which I'll explain a bit here. So basically in the Schedule C, it tells you everything about the condo, everything. And the main thing is what's called the reserve fund. So it's basically how much money the condo corporation has saved up for repairs and maintenance of the building, right? So if just an extreme example, which it usually wouldn't happen, but an extreme example is, let's say there's a condo building with 20 units in it and they have to fix the roof and it's going to cost $100,000 to fix the roof. If there is no money in the reserve fund, they do what's called a cash call. So they're going to knock on all the doors of all the condo owners and say, hey, we're going to need $5,000 from each of you because we have no money saved up to fix the building. So we need your money to fix the building. So it's called a cash call. So we got to look at that. That's why we need a lawyer to look at the reserve fund. They'll check out how much is in there. Is it sufficient for what needs to be done? What needs to be done in the building? What has been fixed on the building? And are they putting the right amount of money into it? So that was a big thing I come across a few months ago. We got the Schedule C. They said in the Schedule C that yes, we're putting the right amount of money into it. Let's just say we're putting $140 from condo fees into the reserve fund, but he found out they actually weren't. They were only putting like $40 into it, not the 140. So there was a big discrepancy there. And that was just too much for my clients. They said, we don't trust that, because if something breaks and they come calling for money, we're not dealing with that. So they backed out of it, which it was in the conditions. They were able to do that, right? Didn't lose their deposit or anything. We're all good. But that's just why it's good for a lawyer to look at that. I know what's in there, but I'm not qualified to explain a lot of it and to you, right? So it's also going to show you in there the bylaws. So it's going to show you what you can and can't do in your condo for renovations and things like that, right? So that's good to know about. It'll also let you know if there's a possibility of a move-in/move-out fee. So if you're going to move into the condo and move out of the condo, some condo corporations charge you like $100 per move-in or move-out, or they might just charge you $200 to $250 at one time for a move-in, move-out fee. Some do, some don't. So it's things like that we got to look at, right? So it's such a big book, like it's huge as well. So it's always, what I usually say is when we're doing a deal together, if we're buying a condo, I recommend right away we need to find a lawyer, because once they send us the Schedule C, I'm going to send it to you. And as long as I got permission, which I, again, strongly advise, I'll send it over to the lawyer too, and they'll have time to review it and let you know how it is. They'll have a conversation with you about it. They'll let you know if there's anything to worry about. But yes, again, doing this is free, but you do have to send it to a lawyer. And some lawyers, I know my guy kind of, if you're dealing with my lawyer, and you have a Schedule C, he'll knock some price off just to help you out, kind of thing. So it's just things like that to think about. It'll tell you how much the condo fees are, how much they've risen, what they used to be. They'll tell you everything about the building. So again, another example is I had a guy that wanted to buy a condo and he hates carpet. He wanted to rip all the carpet out of the condo. So we went and looked at one. He loved the area, loved the building, loved the amenities it had. He just didn't like that there was carpet in there. So we looked into it, and the main floor had laminate flooring put down, which he liked, but he wanted to take the bedroom carpet out and match the laminate flooring. So we looked into the estoppel package. Under the bylaws, it stated because people were complaining that once you ripped the carpet out, it made people walking above them, their footsteps a lot louder because of the laminate, that they weren't allowed to put laminate in. So if you're going to renovate the unit, you need to put carpet in. Well, again, he hates carpet, so he didn't like that. But at least he had that idea going into it that you couldn't just go in there and started renovating stuff and didn't know about that bylaw. So that explained a lot. So he ended up, not going with it, kind of deal. The other thing is that we were out on the balcony. He was about the third floor. We were on the balcony and we noticed that the floor of the balcony was rotting through and the metal railing was starting to fall apart, and it was in really rough shape. So again, we looked at the condo package and the Schedule C, and it said that we were aware that the balconies are in rough shape, and starting right away, we're going to start at the worst balconies and fix them all the way till they're all replaced. And we have enough money in the reserve fund that it's not going to come at anybody's cost. So it's all good there. So, it's things like that. Same thing as well, like because you're buying these units, some things are covered by the condo corporation, some are by the unit owners. So again, we were looking at a condo, and the attic up in the the insulation in the attic was kind of starting to fall apart and kind of looking like rough shape. So we called the property manager, and they says, nope, that is part of the condo's problem, not the owner's problem. So let us know when you guys are moving in, and we'll come and have a look at it and start the process of fixing that for you. So it's just things like that I do that for you guys. So once the home inspection is done on these condos, if there's some issues and we're not sure who's dealing with it, whose responsibility is, I'm going to be calling and find that out for us before we make any decisions. So that's kind of the deal with this condo. So again, they're mandatory to get, but it's highly advised you send it over to a lawyer. That's the only non-mandatory part about it. So again, it'll save you a bunch of money. Again, if you go into this and you start ripping it apart and want to do renos and you find out you can't do half of it halfway through, that's not good. So it's going to save you a bunch of money in the long run too. So if anybody has any questions about the Schedule C reviews and anything about the Schedule C's, let me know. But that's kind of it. We're running a bit over, so there's a lot to cover, but that's kind of it for most of it. Now, hopefully I've alleviated some things about it. I know we had a lot of stuff and it kind of threw a lot of information at you, and I'm going to put it in here again. Here's a book and a call link. If there's some things that that you'd like to know about, feel free to reach out to me. Or if you guys think that you're ready to do this, by all means, book a call with us. We'll start the process. We'll get things going, and we'll help you out here. But hopefully I gave you a lot of information off the bat. We're gonna pretty much now, we're just kind of at the end, Q&A session. So I'm gonna put in here everything to help you out even more. So this is my the book a call link. So there's a book a call link again. There's my email address if you need to get a hold of me. There's my direct cell phone if you need to get a hold of me too. I always please advise, just book a call with me first. That's the way I know that I'm going to set aside some time to speak directly with you. And then once we get that first initial book call out of the way, then you can call and talk to me anytime you want. But I just want to make sure I'm there and available for you for your first initial call. So please book that first call, and then we'll go from there. Again, there's the Linktree address. You can follow all my social medias so you know, again, who I am as a person. But yeah, if anybody has any questions, now is kind of the time. I'll stick around for a bit, but yeah, feel free to throw whatever out there. If anything's on your mind, you want us to go over something, or you have other questions about other things, I'll be happy to help. If not, if you guys are out of here, again, thanks a lot for being here. Watch in the next day or two, you're going to see a email coming that'll again have my my buyer's book in it, and it'll also have that buyer's guide. You guys are going to get that again. So again, I appreciate it. But yeah, thank you guys for showing up. Much appreciated. So hopefully I helped. Hopefully I answered some questions for you guys. And yeah, again, if you have any, thanks again, Robin, for answering some questions. And all that for the financing side of things. Same thing. So that email that I'm going to send with the book and the buyer's guide, there'll also be a link to the recorded webinar for this recorded one. It'll take you directly to my YouTube page to the exact one. But if you want, there's some past ones that I've done as well, but they're about the same thing. So in that email, you're going to get the buyer's guide, my book, the recording link, the book a call link, and mine and Robin's contact information will be on there as well. So whatever you need to get a hold of us, it's all right there so you can see it again as well. So again, thanks everybody for showing up. I'll be sticking around. Again, thanks again, Robin, much appreciated. Thanks for answering these finance questions for us. And yeah, well, looking forward to speaking with some of you here. No, well, you're close. So the first time buyer's incentive is only going to give you 5% for resale homes. If you go for a new build, I believe they can go up to 10%, but just for normal resale homes, they're only going to give you 5%. But you can put down as much as you want. You just can't go over 19.9%. So the max you could put down to qualify for the first time home buyers amount is 15% or 14.9%. So yeah, sorry, I kind of misread that there, but yeah, if you go over 20%, they're not gonna help you out. So it's just to help if you don't have that much for a down payment. That's kind of where it lies, is give you a little bit extra down payment, give you a little bit less payments up front of the start, right? It's just to get you started, get you rolling, get some smaller payments in, and then eventually when you build equity in your house, they're going to want their investment back. But yeah, you can put as much down payment as you want. There's really no limit to that. Yeah. So yes, that was so is there, I've had that asked a lot too, is if there's a like, what if we do a home inspection on the home and it falls apart and it will and we got to go look at another place. So what, I've had that happen. Sorry, I shouldn't say I've never had that happen yet. I've been able to negotiate fixes and prices off to satisfy the, you as a buyer, that we haven't had to walk away. I've never had an inspection of a house go so bad that we walked away from it, but it has happened to other people. So if that happens, so if you pay, let's say $500 for a home inspection and it's a disaster and we walk away from it because of that, and we go find another house and we got to do another inspection, unfortunately, yes, you do have to pay for it. However, I know the guys that I work with that I recommend as home inspectors, they've seen it before too, and they feel bad, so they offer you a deal on the other one. So if you've used them for that one and it fell apart, if you use them again, they'll offer you a discounted rate. So I don't know, I'd have to talk to them again, but I think they'll offer like a half rate. So you'd have to spend half the money for that. But that is a good question, because that can happen. But for all the home inspections I've been a part of, I have yet to run into a home that was so bad that we walked away from it. So that's just yeah, a couple things like that. Thank you again. Perfect. Thank you. Yes. Again, I'm going to throw it all in here because it's already saved, but there's all my stuff again. Feel free to reach out to me. I know that was a direct. I hate when it does that. Sorry, here it goes again. There. Yeah. Everybody there. That's again. So yes, feel free, reach out to me if you guys have any questions. I'm always happy to help. I love answering questions for people. So I know there's a lot of uncertainty and everybody's, I know a lot of, a while now, you're always going to get people worried about the interest rates and things like that. So yeah, no issues yet. Sorry, I don't know why we were having issues with the link, but I will, yeah, once look for, I want to say, give me a day or two. So I'm hoping to get it out to you guys tomorrow. But if not tomorrow, I'll have it to you guys by Friday. You'll have the email out with everything I promised you guys. So just, I know the last time I was having technical issues, it was a disaster in the last webinar, but I'm hoping I had it all fixed up. So I'm hoping by tomorrow, the next day, to get it out to you guys. So much appreciated again. Again, yeah, so touching on these interest rates, I know it's, you hear that going up, but we were in, for the last couple of years, the last 2 years since COVID, we were having those some very, very, very nice interest rates. We got lucky with those ones. But if you look at pre-COVID, we're kind of back to where we were. We're kind of, we're still really low in a sense, right? We're in the small single digits. We're below 5%. We're still, this is pretty close to average of what it usually is, right? So we were just lucky for the last 2 years to get ridiculously low interest rates. So for the people that got in on it that time, that's amazing. However, this is kind of where we're still in a very good position. The market is starting to do a bit of a shift. I've seen it a lot because from last year to earlier this year, when a home came on the market, you had to jump on it that day. Otherwise, it's already sold that day. It was insane. You put a sign, like when I put a sign on the lawn to list somebody's house, it's pretty much sold the next day, if not that night, right? It was crazy. But now, when you're going to, it used to be where you could book like 5 to 6 showings in an evening and, we pick and choose which one you want, right? Before it was just crazy, just hitting, and you find that house, you need that house, you get to look at it now and make a decision now. Now we're slowly getting over that hump, and we're kind of getting to the point where we can now start looking at more houses at once, make a more informed decision, not a rush decision. It still is low inventory out there. Don't get me wrong. There still is low inventory, but it's not nearly as it was earlier. So definitely for buying a home, you're still in a very solid position, and we're definitely able to get you into something and not a rush. You need to make a decision now kind of feeling. It's shop around again like it should be, right? So yes, you guys are definitely still in a very good position. And the nice thing is there is chance of rate holds too. So if you get, let's just say I think it's 4.79 roughly for a 5-year fixed rate, I believe. I have to check the numbers because they vary every now and then, but it's around that. But if you can get locked into that, get a rate hold for 3 to 4 months, we have time to shop, right? So that's kind of things to watch out for. But yeah, so again, if anybody has any questions, again, I thank you guys so much for coming. Yeah, I really appreciate you guys taking the time out of your day to watch this, and hopefully I answered a lot for you. And again, if you have any more questions, feel free to reach out to me at any time you can. Like I said, first time, book a call, get that out so we can, have a one-on-one where I have a time slotted directly for you, and then we can go from there. And then, like I say, once we get that first initial book call through, and we establish this relationship, then you get my personal number, which I've already put there. You need me at any time for any questions or anything, you get a hold of me anytime. It's just, I like to book a call because I want to be able to be there and available for you initially. And then we can get into a really good working relationship after that, where we can just talk whenever we need, and you can call me and say, Andy, what about this? We've got a bit of an issue, and we take care of it right away. So yeah, I'm looking forward to it. For everybody that booked a call, I'm pretty excited to talk with you and help you guys out. And I know Robin will be too. So again, thank you guys. So yeah, I still have some time. I'll hang out for, I'll give another 20 or 10, 15 minutes here. But if nobody else has any questions, yeah, feel free. Any comments or anything too is much appreciated. I know I also do, if we look for a place, I always ask for reviews because that's always building a business. So once we take that picture of you in front of your nice new home, then I'm also going to ask for a review. It's just kind of something I ask for myself too. But yeah, I'm looking forward to it. It's going to be fun. So yeah, if anybody else has any questions, comments about the market, anything like that, feel free to let me know, and I'll see if I can answer them here. Yeah, no worries. Thank you again, Robin. I appreciate it, but I appreciate it again. So we'll be in touch. Again, so there's still about 12 of us in here. So again, if anybody else has any questions, feel free to throw it out. If not, I will wrap this up and we'll go on our way, and hopefully look forward to talking to you guys soon. Okay, well, I think that's going to wrap it up. Thanks again, everybody. I hope you guys enjoy the rest of your week. Have a fantastic weekend, and looking forward to talking to you guys soon. All right, see you guys.